Okay, in this video what I'd like to do is step through a trade example of how with using the weekly and daily F dates, the major bottom of Euro could not only have been located but traded successfully by just using some simple technical techniques. We're currently looking at a weekly chart of Euro, and the current price bar shown here is July, the week ending July 27, 2012. Now, we're interested in this weekly bar because it happens to be, as you can see, was one of the weekly turn dates in the report, 7/27. So the question here is, would this be a good weekly turn to try to trade to the upside? Now, the reason why we'd want to ask this is because you can see that this market has been in a very strong bearish trend. I've applied the Keltner channel tool to this chart because it's very useful for the purposes of checking whether a price bar is a deviation or two away from the mean, which would be the center of this band. Now, I've done a variation of this in the past where I would just simply have a 21 exponential moving average on the chart, and then I would basically state that, you know, as prices move away from that line, expect it to snap back. You may recall lessons such as that. When prices move far away from it on the low side, it'll snap back. Well, the Keltner's the same thing. The outer bands are just based on a times 2 deviation of the mean in the center here, and the width of it is dependent on volatility. In other words, the range of the price bars as they start to get wider or taller, however you want to say that, then also so will the channel. Anyway, normally if the bars are trading from the center channel area here to the bottom, it's bearish, and when it's in the top half from around the center here to above here, that is bullish, and you can see how it will hug one side or the other. So we're interested in this price bar of July 27, 2012 because it is a weekly F date. So it is being predicted that this will make a swing. And when we look at a MACD such as I have here, and this is an indicator that I love to use a lot. If there's any kind of indicator that I'll use, it will be the MACD. Let me move this down a little bit so you can see that. And if you look at the previous swing bottom in the weekly chart here, and then look at the MACD line, that's that blue line right here, okay? And then you come and you'll look at the current weekly low, look at how it is so much lower than the previous, and yet the MACD line is pretty much even here. It's not lower. It didn't follow price down to a lower spot here. This is called divergence. In this case, it's bullish divergence, and this is basically saying that the indicator is saying, you know, I really don't support this move down here. That momentum is dying out, because this is a momentum indication here using the MAC. So that bids well for soon for a weekly swing bottom to occur. So this is one great candidate to look at because of the fact that we have divergence and we are starting to move towards the zero line once again while this has moved down. So this looks like a good one to go for. Now this is the daily chart of the euro, and I'm going to once again add the bands to the chart, and we can see we still have the MACD. And you will find it interesting that here's a previous bottom in the euro. Here's where the MACD line was, and if you notice, the bottom of week ending 7/27, which occurred on 7/24, which is right here, which actually occurred one day following an F date, but we're not trading it because it's the very bottom, so we let that go ahead and confirm, and prices move up. And this is 7/27 itself. This is the Friday right here. So we can see that it happened on Tuesday of the week. And if you'll look here, you'll notice that the MACD line was higher here than it was here, while the price was lower than here. Another indication of where we don't have support for this extra move down here, and so we should expect a really nice move coming up off of here based on bullish divergence. But what we want to do based on our F8 guidelines is we want to find an opportunity to buy off of a higher pivot, higher swing, away from the actual low of the weekly swing bottom or potential weekly swing bottom. So we'll just go ahead and let things play out. Okay, prices are currently moving down now, and you can see this is 7:30, and if we take a look at the report, we can see that following that bottom for the week itself within week 27, we do have 7:30 and then 8:2. Remember those two, 7:30 and 8:2. This here top of the week just confirmed is one day early of 7:30. So this is the turn likely for that F date. However, it doesn't mean that we cannot suspect that there's possibly going to also be a bottom. What we can do if we want is we could put a buy up here, or we can just go ahead and let this go and see if we get a lower bar for F882. If we went with this one, for example, and you felt that maybe it was going to be a quick, bing like this, you're already in, but your stop loss is going to be right here, nice and close, and hopefully it just continues up. Otherwise, we would want something else. Now we would get stopped out here, as you can see, and that would have been a loss. This price bar here, however, is 8.1, and that's our first potential higher swing bottom for F882, and we could put our buy right above the high here. The next day, okay, we got an outside bar here, so the next day, and you can see that it closed here, so when it opened here, it made a low first, okay, and then it moved up. So we would not have had our order here unless you wanted to. As soon as prices moved lower for 8.2, you could put your stop up here if you wanted, but the thing is you would have never known that this was actually going to come up the same day. But let's just assume we can go either way. You can go ahead and have had your stop here to go long, or you would have just waited for this bar to form. Now the way it is, because it's so long, if I was to trade this, I would want a different entry than trying to buy up here. So what I would do is I would take a trend line and go off a previous top to previous top, because this bar is ridiculous. It's too big to actually put a buy up here and a sell way down here, stop loss. So I put a line like this, and then if the next bar hits me with my order right here, and you'll notice that it actually comes out to the same as had I put the order here. But let's say I'm going to put the order here instead. As long as we still have a potential higher bottom for F date 8.2, so it can actually take one more bar easily without a problem. But it looks like prices are swinging up. Here's 8.2's higher bottom than here, and we're filled. Okay, now we're going to need to have a place to put our stop loss. And what I would like to do for this, for example, is now that we have a swing bottom here and a swing bottom here, I'm going to use my trend line again because I love trend lines. And I'm just going to go ahead and leave my initial stop here. Okay. Another option though is if you really want to minimize your risk exposure, you could use this, if you like, as your stop loss and put your stop loss like right there, and you're only risking from, well, there to there. You're just risking that little bit right there to there. It's not that much. That's a small thing. But remember that by putting your stop here, okay, that you have a greater chance of getting stopped out. And another thing is, notice that your line is moving down. That means by using this line, you literally would have to move your stop down each day, which is normally not something you normally do, moving away from the market. But because you're choosing this line, you would do that until you met this line and could start picking up again. Or you can just start leaving your stop down here. Price continues up. That's Jim and Dandy. Goes up again. So we're kind of like in profit here a little bit. Let's see. Let's get a price here. Okay, we're talking 123.90 is where we would have likely have purchased right here, and so far it's gone up to let's see, 123.90, and then we're at 124.93. Well, okay, we're over 100 points. It's so hard to tell with the daily chart here. Okay, now it's coming back down, and I'll remember we're actually trailing our stop this way or this way, your choice. Okay, and that's our protection here. That's what we want. We also want to look at, as we're coming down into pulling down, and as you can see, we're in a buy area here. I know that we're in a bullish, you can see the MACD, and this is turning up on the Keltner and everything. We've confirmed our weekly swing bottom. Everything's going good so far. What you want to do is see if you can add more contracts. So what I'm going to have to do here is look at the next F date report that came up, and see we have 810, 815, 820. Okay, 810, 815, 820. Okay, so we can see that that's 8.9. That's 1 day early of 8.10. So we could put an order right up here and see if we get filled the next day. Okay, and we don't get filled the next day. Okay, so now we're at 8.10, and we're also at our support, and you know, and our stop isn't hit, and it's still higher than here because that line's going to make sure that we're always trading higher. So now we have 8.10. We have another buy setup. We put our order to buy one tick above this high here, and we try again. This time we got filled. Okay, now the question would be, should I keep this as my stop loss line, or should I start moving my line up underneath these higher swing bottoms here? My advice is to take the previous two tops that you have here. For example, you can see that one and that one. Draw a line from that, a channel line. Okay, like if I was to take my channel tool, and if I went across like this, and then I applied it here, okay, as you can see that it would make this line slope lower than the line we already had. I don't want a lower line. I'm long. I want a line that's sloped higher. So in this case, I wouldn't change my stop loss line, and I would just use the same one. So we're in 2 contracts or 4 contracts or 8 contracts, depending on how you're adding more contracts. We're moving higher. We're moving lower. Remember, our stop loss is along here, so we're still good here. Okay. Now you're not right up to the line here, so that you're still okay. And that's a bullish bar. You may have another opportunity to buy here. So let's see, what is that? 816. Okay, well, we have that 815 $ F date, the asterisk, which is that bar right here. So this is a buy setup, 1 day late, but it's a buy setup. If prices move above this high, we can buy it. So why don't we add a 3rd contract if we like? We put one right there, and okay, we're filled right here, and our stop loss for all 3 of our contracts are down below this line here. Just keep it nice below this line here, and let's hope for the best. Okay, we might get stopped out here. Oh, we're good. Okay, we don't need this line anymore. I'm going to get rid of that. Okay, so price is now moving up, and as it starts moving up, we're starting to get to the top channel here, and you might start considering changing your stop loss pretty soon. What we can do is you can wait to see where this top forms, draw a line from one top to the next, and then apply the second part of the channel here, and if it gives you a higher angle, then we can abandon this one. So let's wait to see if we get that. Okay, we're still going good. Okay, so we're starting to correct here. Let me go ahead and get a channel, and we can apply the channel here. And I can tell already, just applying, that the angle of that channel is not as steep as the one we have, so I'm just going to abandon that. This is still the steepest line, so let's just go ahead and keep this stop loss where it is here. Okay, and we're coming down. You can also see if we have a buy setup here. I'm not too big on the 1 bar pullbacks, just like this little nasty thing right here. I prefer 2 or more bars, but if you wanted to, we can definitely see if 824 is an F date. Let me see. Okay, it should be noted that this is a $ F date, so we're going to have to kind of be careful here, because I would think we'd get more than just a single bar back on that. But we do have an F date for 827, which is that bar right here. That's a pause low bar. You could, this one here is 1 bar early. You can certainly buy above here if you like, or you can buy above here if you like. That is certainly a choice. Another thing you can do is you can draw a trend line down from this top down to this top, or this top down across. It's your choice, and then wait for a breakout above that trend line before entering for that one F date. Or we could just wait to see if we get maybe another pullback before we well, we did. We got this one here, but then it crossed up here. So we could buy above this high, or we've already bought above this high. Again, it's your choice. There's no way of knowing. All you know, the only thing you know is you expected a turn here, you expected a turn here. This was a $ F date. This is F date 827. Okay, so we're long again 4 contracts, I believe. And at this point, now that we're moving higher here and we're loaded up, I'm looking at this previous top here, and I'm thinking it's time for me to to tighten up my stops. I don't want to be too far behind price action because now I'm really committed and got several contracts going. I am in profit, and I want to make sure that if anything, if I get stopped out, then I'm actually going to have profit and not a loss. So now I'm locking in profits. If it came down here, I would definitely lose on this, but this would more than compensate for whatever I lost on the one contract here. So now my stops are now below here, and they'll stay below here until I get to this line or redraw a different trend line. Okay, so we'll address that when it happens. And we see nothing's happening here. Okay, we got prices pulling back. Okay, so we're still good here with our stop loss. We're still locked in with profit. Okay, we're now going to start moving our stop loss up again with this trend line. Okay, so we're right here. And again, I'm going to forego looking at any more F dates. I'm pretty much loaded with contracts right now. I've locked in. I'm going to go ahead and ride this trade out because we're already at the top of this channel. And at some point, we're definitely going to start pulling back. So I don't want to get caught at the very end. Also, we're in the week of September 9/7, week of 9/7. This is 9/5, and okay, we're still going higher. And the next F date for this market is W date is 9/7 plus. It shows here. Okay, so we're at 9/7 plus. So we're expecting a weekly turn this week. Now here, this is Friday's date of the week that we're expecting a weekly swing top. So we're definitely going to want to start tightening up stops here if we think that this thing might start pulling back on us. And okay, we got this little bar pulling back here. It didn't even make a higher high. Personally, myself, I'm tightening up stops. Let me get a trend line here. I'm going to tighten up my stops because I'm not wanting to give it away. So I'm putting my stop down here now. And then come the next day, my stop is here, where my arrow is at. Okay, we're good there. That's great. So I'm right underneath that low right here. Okay, because I just don't want to give up. Now I'm underneath that low, and I'm stopped out right here. Okay, so if there's any more move up on this thing, so what? It is what it is. And look, it just took off there. That's great. And now there's a possibility that we'll see. By the way, we are now in week ending 9/24. So we'll have to go to the weekly chart to see what happened to week ending 9/7 plus. But let's see here. Okay, I would have gotten stopped out here, but I was stopped out down here. So I would have lost out on just that little bit right there. But that's pretty much a pretty decent trade that we caught the very bottom using F dates and W dates. And hopefully you've learned about the use of these, how to use trend lines and so forth. It's a pretty good way of trailing your stop. You want to the bottoms and tops of the market give a lot of clues as to where support and resistance located at, because it stopped price at some time. Like I'm going to put a trend line here, support line off this previous top, and I'm going to put one here too as well, because that was a previous top. So that way we can you can use that for the purpose of support and resistance for future prices and so forth.